All right, everybody, I've got a trade for you today. Well, in a stock that I've never traded before, a high flyer at the low end of its range. I'm talking about VST. Now, what is VST? Because I didn't know what VST was. Well, it's Vista Corp. It's all about electricity and power generating, kind of big in the data mining and also Bitcoin universe. It's one of the largest competitors of power generators in the U.S. It's not some small little company here. It's a decent sized company. Nuclear, solar, all the key words that you want to have in your portfolio is right here. So let's take a look at that. First of all, the market, even the S&Ps are up $5.75, really going nowhere at this time. So let's look at VST at all-time highs, by the way. VST, IV rank of 33. You can see it's been significantly higher when the stock was at the lower end of its range, but it's been upticking the last couple of days, so we're playing that high implied volatility. Stock is down $12 and change. I do have to tell you, I did this when the stock was down closer to $14. You'll probably have to pay a little bit more than the trade I'm looking at, but let's take a look at it first. So what am I looking to do? First, earnings, November 6th. So I'm playing this into earnings, right? I'm going to hold this with so it's a defined risk trade because earnings are coming. I'm taking advantage of, look at this, 71% implied, almost 72 in November. That's what I'll be selling. And I'll be buying December with 64. So I'm hoping we get a little pop in the stock, meaning higher, and this volatility contracts if the stock moves higher. So what am I doing? Typically when I do a diagonal spread, and that's what we're doing here, I like to buy the 40-ish delta, especially on these high flyers because they cost so much money. There's so much call skew here. And you'll see that there's decent amount of trading in here, even though the markets are a little bit wide. So you got to be selective with your pricing here. So I'm buying the 200 call in D's, which actually has a 43 delta with the stock almost $14 away. You'll notice the at the monies right here, the 85s and 90s. The 90s have a 52 delta, even though they're out of the money. That's just because there's so much call skew. So you are buying call skew in December. So I'm buying the 200. I like to buy around the 40 delta. And then in November, I like to sell somewhere around, the 20-ish delta in there. So I'm going all the way up to the 220 calls in there, and you'll notice that there's volume in each one of these two. Obviously, November is going to have more volume, you would think, shorter duration than the longer dated December that I'm buying. Now it's trading at $9.25. I did this at $8.80, so that's my risk on this is $8.80 or $880. Now, it's not going to show you probably a profit because there's no telling what volatility does in each one of these months. If volatility expands in November, this market will change even with no change in the stock. But it is an interesting trade. On one point, you're getting 23 or 24 deltas, just about 23 or 24 deltas here on a stock that's moved $12 or $14 and has moved a lot each day. So you're getting a lot of bang for your buck for defined risk, $880. It's definitely a bullish trade in here. You want the stock to go higher. The expected move in November is $24, which brings you just about outside of where our November option is. So what am I hoping goes on here? Well, I'm hoping that the stock sits or goes a little bit higher, goes higher quickly after earnings or even in the next couple of days. What can I look to make on this? Well, you can see the stock has moved $2 already from where I put this on. And I will be quite frank with you here. I did get filled right at mid-price or a nickel above mid-price. So if you're looking to put this trade on, if I was looking to put it on right now, I might go in at 920, 925. It looks like as you sit here and watch, it hasn't moved too much. I got filled at $8.80. You can see all of these trades on the follow page. If you go to the follow page, you click on the bats and you'll see right here, I did it when the stock was just under $8.85. It's a custom trade, meaning that it's dynamic, meaning that there's no the delta is going to be there. There's no probably a profit on this trade because there's no way of telling what volatility is going to do in each month, whether it's going to hurt you or help you. But I have here, it's all about price and monthly vol differential. I'm definitely playing price. I'm definitely playing this to the upside. It's slightly bullish. I mean, it has 25 deltas, typically something that we can afford to do with $880 of defined risk. You can't lose more than $880, and we have so many things that we can do with this trade. What are some of the things that we could do with this trade? Well, if we wanted to, we could roll down the no of calls if the stock goes a lot lower. We can wait until after earnings if the stock goes lower. We can buy back the no of calls and then sell something further down, make a calendar spread out of this, or just hold that long gamma. Everybody talks about having long gamma on these high-flying stocks. Well, this is a trade that has long gamma in those high-flying stocks. What can I look to make on this trade? Well, I mean, listen, $3, $4, $5 is not out of the question on $880 worth of risk. All right, ladies and gentlemen, that's my trade for you today. Kind of pseudo earnings play on a high-flying stock that has sold off about $25 to $30 over the last 3 or 4 or 5, 6 days with the market making new highs. Interesting? Maybe. You know what else is interesting? Opening, moving, bringing your account to Tasty Trade, helping us keep the lights on here, helping you keep all this content free for you at Tasty Live. Go to the #1 brokerage firm in the galaxy, Tasty Trade, today.